Cast is now starting. All attendees are in listen-only mode.
Traders, what's going on? Kyle Bazzi here, president of Marketfy.com and Benzinga.com. All right, I am wicked excited for everyone to be here tonight. We have over 3,000 traders that have signed up for Marketfy Education Week now. Tonight is part 3. We are bringing you a fan favorite here on Marketfy. We have over 50 traders that have product on Marketfy, and Nick is by far and large one of the fan favorites and one of the best performers on the site as well. He is going to be talking to us tonight about the secrets to credit spreads for extra low risk income. He has a stellar track record, and he's going to show that tonight. Just to recap, we had Monday, the part 1 was the psychology of trading by Sanglucci. Tuesday night, last night, was using candlesticks to trade wedge and flag pattern breakouts by Serge Berger. I'm going to go ahead and drop a link here in the chat. So check out the chat for those recordings. So if you were not able to attend, I'm going to drop a link real quick to those recordings. And tonight we have Nick presenting. And then tomorrow night is our last night. We're going to be wrapping up Thursday, 4:30 Eastern time. So the same time as tonight. And it is what you need to know to make big pips. Talking some Forex with Scott Barkley. Okay. All right. Now I see a ton of people in here, but I know we got a lot of great people that are have joined us all 3 nights, or even just a couple or one of the nights so far. But before I go into the presentation with Nick, I want to welcome everybody to Marketfy. Marketfy is the only store where you can shop for the web's best trading courses, newsletters, and chat rooms. We started Marketfy for you sitting behind that computer right now, looking to either learn how to trade better, looking for great trading ideas, looking to join communities of like-minded traders to make yourself better. There was so much crap out there that when we started Benzinga, which is a financial media company with millions of unique visitors a month. We're partnered with all these big brokerages like TD Ameritrade and media companies like CNN Money and Google Finance. And we had met so many people that had lost money not in the markets, but trading with awful newsletters or scammy scumbag educators that really didn't know what they were doing. So we said, that's it. We need to start a verified marketplace where these people put their product on our marketplace. We throw them through the ringer to make sure that it's really great content and that anybody that purchases can have the trust of us that, they're not guaranteed to obviously make money, but they are at least with somebody that is credible and that is worth paying money for to learn, okay? And that's what we're bringing you tonight, and Nick is by far one of the best ones, okay? Marketfy's guarantee, all products are audited and verified. If it's on Marketfy, it will make you a better trader, okay? Now, you got to put in the work too, but it will make you a better trader. One quick disclaimer, for anything that's in trading, it doesn't matter what it is. There always is the risk of losing money, everybody. And this is part of the reason Marketfy started. If you've ever seen, go into the chat, and I know you guys you're awesome with engagement. Go into the chat and you let me know if you've met a site that you could just tell was complete snake oil salesman. Maybe they were driving some Maserati or Bentley in their marketing video, or saying, turn $4,000 into 4 million in 3 months like I did. That is crap. There's no guarantee. There's past results, but they're not indicative of future results. So always make sure you guys know that, okay? And please respect that. All right, real quick before we get into the content, can everybody give me a yes in the chat for if the sound is okay? Is the sound adequate for everybody? All right, cool. Steve, James, Beach, Pete, Bruce, Mike, Tommy. All right, cool. Everybody looks like we're going good. We got a lot of people in here tonight. This is awesome. All right, here we go, guys. The secrets to credit spreads for extra low risk income. The screenshot you're looking at is Trade Monster. We highlighted a couple of arrows here. Trade Monster's order entry form this is, and it shows you, your maximum profit, your maximum loss right here, your break even, your risk reward. It's a really cool order entry form. Nick uses it, and he can talk about that. But moreover, today's a story about how 90% probability can change traders' lives. And this is the strategy and the thesis that Nick trades, and he's done it with a ton of his students. And I am so excited to bring it to you guys tonight. And moreover, this is my job. Who is Nick Shaheen? This is my job to you. This is Marketfy's obligation to you guys sitting behind the computer screen before we jump in. Nick is unlike any other Maven on our marketplace. Most Mavens might have worked at the CBOE, or they've been trading, prop for a long time, a head trader at a big prop firm. They might be, some kind of expert or analyst that came from, Goldman or something like that. What I love about Nick is Nick was just like you 10 years ago. Nick was a novice trader. He didn't have a background. He wanted to learn, and he wanted to become a full-time professional trader. Okay. He had his couple years of bumps and bruises, and now he found a winning strategy and became a professional over those 8 years, a self-made professional, right? He's also, as you can see, a prominent stock twits and Twitter contributor. His Twitter handle is Racer Nick, and as you can see, and he doesn't tell anybody this, and I found this, he's a race car driver, which I think is really, really cool, because at the end of the day, we're all looking to have trading either, be a supplemental income stream, or we want to start full time and that be our job because we love the markets. Nick did that. That's what Nick did. But that's also, you got, you're doing this because you want to live, right? You work so you can live. And Nick's a race car driver, and I feel like that's something really cool. I saw a note, and it said, like, software engineer turned finance guy turned internet entrepreneur. He sold an internet company, made a lot of money, and then he became a stocks and options just junkie. And now 10 years later, making a lot of money trading for himself, and a very successful guy, MBA in finance. And he is one of the top, and I'm so proud to say this, one of the top 3 performing Marketfy Mavens in 2013 so far. This graph you're looking at below, this is the S&P, this is Nick, and I love this right here. We're all worried about the market going down right now. With the tapering stop, you have all these pundits on CNBC talking, and look what real traders are doing. The guys that they don't listen to the hype. They usually turn off or mute CNBC. Hopefully they listen to Benzinga, but they mute CNBC, and this is what they do. They still make money, okay? Down market, up market, traders know how to make money. And this performance you're looking at is what we do. We verify all of this. He runs his trades through us, and that's why I'm so excited to teach this strategy tonight, or have him teach this strategy tonight. And real quick, before we get into it, listen to people that are making money, right? Listen to people that have a strategy and can teach you a strategy that are successful. Marketfy brings you those people, and we are the ones that verify this stuff. You can look at here, and you see a couple of losses here, but these are the one contracts here, and Nick can tell you this more. Those are actually hedges against the above position. So those actually aren't losses. He was just taking a little bit of risk off the table, okay? You do see a loss down here, but again, he wins 9 out of 10 trades, and that's verified inside Marketfy. All right, Nick.
Yep.
They do not want to hear me talk anymore. They want to get to the good stuff, baby. And I'm so excited. I bring the energy. I was just talking to you about 5-10 minutes ago, and I was talking to Nick about how much I'm having my first cup of coffee of the day, and when I have coffee in me, things start to get real crazy. So I hope you're ready to have some fun. I know we got an awesome audience in here. We are packed, Nick. We are at max capacity here in the webinar. First, I want to go over with you, Nick, and I'm going to throw the slideshow to you after this slide, the problems with trading spreads. And I would say it's the problems that you were sitting at the computer, and this is what Nick always talks about, right? So, Nick, I'm going to go ahead and throw you the slideshow right now. But how about you, welcome everybody to the webinar tonight, and let's get going.
Okay, I'll take it over from here. First of all, thanks again for all of you to join. I know I had some people on Twitter and StockTwits ask me they weren't able to log in. I guess we were close to or at capacity, but then we made a little more room. So I know everybody was able to join. Kyle has been so excited about this, and you can sense it and hear it in his voice, obviously, a lot of energy, and he's been telling me to go drink some coffee, and we were just talking ahead just about 10 minutes ago that coffee doesn't do that for me. It really doesn't. I can have a double espresso and hit the bed right away. It doesn't give me the pep. So what I do is I'll just jump in my car and go around the block and take my couple favorite turns, and bam, 160 heart rate. And then I can sit back at my desk and fidget for a little bit. So like Kyle said, I tend to specialize in credit spreads, which is, we'll talk a little more about that. They do have challenges. We do run into problems. I know a lot of you that are attending here have tried them or have heard of them, and you've been scared away because of the problems that are inherent to them. There are no sure things, like Kyle said, in investing, but that's across the board. the whole spectrum is risky. Otherwise, it wouldn't be investing. Everybody would do it. There would be no bank accounts. Everybody will throw everything into the stock market. So you have to be consistent, and that's a problem. You can't profit consistently if you do it willy-nilly, unless you develop a system and the discipline to follow your system. You know, developing the system is one thing, but then discipline to stick to it. And then what do I do? How do I adjust? How do I hedge? How do I take the loss? When to take a loss? How can I avoid taking the loss? These are all problems that you guys have, and girls have run into at one point or another. Also, how do I even get started? How do I set up the trade? Do I really understand it? It's pretty complex stuff sometimes. It's simple in theory, but it can get complicated pretty quickly with all the layers that are involved. And then timing, you know, it's not as crucial as, say, when you're trying to day trade something tick by tick and scalp, but timing is very, very important. So there are problems. I know you guys have all felt it. You've seen it. You've experienced the pain from it and the elation. So the problems are there, and we can overcome them. So today the agenda is very simple for me. We're going to quickly run into options. Actually, I'm going to take it a little bit differently here. Kyle, I can hear your pores already sweating. No changes, no change. I'm not changing anything. I'm just in my head restructuring some things as far as the how I'm going to jump into options. So the idea is I'm going to pin options against regular stocks. And then from there, I'm going to pin options against option spreads. And then from there, long versus short spreads, which is the meat. Also, I'm going to touch up on the option strategies, other option strategies that even make options more attractive, like creating your own dividends, protecting your profits, protecting your positions at certain levels, stock replacement, and there's plenty you can do with the options. But my favorite is credit spreads, obviously. So we'll definitely delve into that. And how can you make it low risk, and how can you actually subsidize your income using it? So hopefully by the end of this, you will find out that you too can do this. You can do it on your own, or you can do it with a little help, or you can do it like a professional trader. And that's where we jump in, and that's how we have our students trading right now. And today was a very interesting day. Obviously, Fed Day. Everybody was, well, everybody that follows the market, at least I was, anticipating huge movements, and they didn't deliver. Actually, they swung up, they swung down, they pointed up, they pointed down, and there was a little bit of everything today for everybody. And but one thing I knew is that there is no doom, and the Fed's not going to say anything new. It's just the interpretation of what they say and how the market reacts to what they say, even though it's the same thing they've been saying all year long, saying the same thing. They have our backs. That's number one. They're going to taper soon enough. That's number two. Who cares? September, October, who cares? They're going to taper soon enough. They're not going to raise rates anytime soon. So having those three things, the theory is the same for me. So the traders today, the students and the members, we went back and forth on a few trades, and it was a very exciting day in that sense. Great interaction with very astute people. Even the new, I had another presentation yesterday, and we had a lot of signups from that. And even the new people, I had the gentleman from Spain sign up, and he had trading ideas and immediately started discussing them. So I was really encouraged with that. Okay, now I'm going to pin up, first of all, stocks versus options. This is an example from yesterday. Hopefully you guys were long Netflix before yesterday's open, because it opened and it went crazy. So yes, the long, I have friends and family that we have that debate always. Why mess with options? You're going to lose your money, risky. You've heard it all. Yes, it's all true, and it's all false too. It's how you treat it. Everything can be good and can be bad in this instance. It can be great, and then if you do it incorrectly, it can be super bad. But in my opinion, if you make a thesis and you put one against the other and you're correct with the thesis, I'm going to show you that options will be better. Okay, we went to bed 2 days ago. Netflix 260-ish. We woke up, Netflix is $8 higher, 268. So if I bought it at 260, it cost me a whole bunch of money to buy it. I risked it, and I can't see the you guys' answers, but because Kyle has control over that. But anyway, if I asked right now and tell me what are my chances of making money if I had bought it at 260, hopefully I see a whole bunch of 50%. It's a coin flip. I could be right, I could be wrong. When I go long a stock, two things can happen. It can go up, it can go down. So statistically, it's a coin flip. I don't like those odds. Regardless, I spent a whole bunch of money on a coin flip, and I'm hoping for the best. Well, I could have done the same thing via options. I could have bought the 260 call. So on the left side, we have the call. So if I bought the 260 call, I would have spent a hell of a lot of money less than buying the whole stock. Just one contract. It probably would have cost about $600 to buy the one contract as a 260 call the day before this happened. And this was the next morning. So the next morning, if I had bought the stock, I would have seen a nice 3% pop. That's huge. I would do the dance if I had actually bought the stock. But I would have done a bigger dance had I bought the option, because the option was up 72%. So big bang for the buck difference between buying the option or buying the stock. So if I'm right, I will want to be in the options. So that's why I prefer options versus regular stocks. So that's fight number one. Here's another example. It's the same theory with the small caps, RUT. Same thing. Had I bought it the night before, I would have been up not $1.40, 1.4%. Had I bought the option around the money, that would have been about 40%. You get the idea. Options, better bang for the buck, all things equal. So why not go down the road of options? Other things you can do with options, I mentioned you can create your own weekly dividends. I'm actually going to show you a note from one of the students and also member. He was sitting on a whole bunch of stocks, and he said he was all depressed because they weren't going anywhere. So I showed him how to actually create some weekly dividends, and he's been selling weekly calls against his positions. No risk, no extra. The worst thing that can happen is him make more money and be called away from his stocks. So all things equal, there are plenty of things you can do with the option strategies versus the actual stock all by itself. You can protect your long positions. You can, like that gentleman, if he was selling calls, he could have, with the money that collects from selling calls, you can buy puts to protect yourself. So you can stock replacement. You can get out of the stock completely and get into the calls, reduce your risk, your dollars at risk. Same theory still applies. You can still participate on the way up, and you're going to lose on the way down. So this is option. So step number one accomplished, in my opinion. If somebody wants to argue with that, we can do that a little later. For example, we put aside the fact that we have options versus stocks. Now, with options, I prefer spreads. So before I get into credit spread, the spreads in general, this is recent. I can't remember the exact day. That was Google, about 860. And these are the option chains, and I chose to show spreads. So you're seeing, instead of single legs, you're seeing spreads. Like right here, if you can see my cursor, 835, 840, that's a put spread. And on this side are the call spread, and where it changes color is about where the money line is, where Google is trading, right about 860. So why I prefer spreads is, yes, it limits my potential money making as far as how much money I can make on the trade, but it also limits how much I can lose. If I'm going long spreads, buying them, if the market goes the other way, I'm losing a little bit less than it would be had I bought the naked spread. So if I buy an 850 level put for Google, if I was, let's be optimistic, if I buy an 865 call for Google and I'm wrong, and Google starts going down, that 865 is going to lose its value really quickly. So I'm losing money pretty fast. But if I had bought the spread, I'd be losing less because I sold something in the back end that'd be losing value even faster because it's further away from the money. So that's why I like spreads versus naked or single-legged, I should say. So step number one, I prefer options over straight up stocks. Step number two, I prefer spreads versus single-legged options. And now we get into three, which is the meat here, and that is the credit spreads versus the regular long spreads, debit spreads. Now, I know you've all probably tried it. If not, you've heard of it and you've been scared. They can wreck your account. Hopefully today, my goal is to actually show you the other side of the argument to where you can actually deliver consistently on it and just enjoy doing them, if not all the time, very often. So credit spreads, actually on Friday we did a special webinar to highlight option expiration day, just basically to watch the spreads expire worthless. In this case, it's a good thing to expire worthless because we took in money to sell them and then we didn't have to buy them, or we bought them back for pennies. This is when you bring out the popcorn and you watch the spreads disappear off your, I call it a burp, an account burp. And it's just very satisfying to see that happen. And some of you may have seen it. You guys have experienced it, hopefully. But the point is, you always get, oh my God, I know this guy that lost his money. I know that guy. Yes, you can lose money, but if you structure them properly, you don't have to. So let's walk into what can I do with the spreads. Now, this is the same Google chain, obviously, we're looking at. The further away from trouble, I call this the trouble line. And when I'm doing credit spreads, I want to stay away from trouble. So as long as price stays away from my spread, I'm a happy guy. So the further away from trouble you go, the less money you collect. So okay, the less money I collect, but I have a lot less chance of incident. A chance of incident is trouble. So I am less likely to lose money, and that's why I'm making less money. But I'll take that any day over a coin flip. So for me, the zero line is not zero. When somebody's saying, what are the chances of success? And somebody says, oh, this trade has a 50% chance of success. Somebody will say, wow, that's pretty good. Heck no. For me, zero starts at 50%. 50 is a coin flip. That's gambling. Go to Vegas, you'll have more fun. And I want to be as close to 100% as possible because 50 is zero. If I really want 50, I want 100%, but that's not going to happen. Nobody's going to pay me for taking a 100% chance of success. So I want to get anything that is 90%, 95%, depends on the trade, depends on the volatility, depends on the stock and or ticker, because sometimes it's indices. So I pick and choose levels that I know they'll be safe from trouble. So the further away from trouble, the better. And that's the spirit of it. The idea is simple. I want to track stocks, choose levels where I think the ticker is not going to go there. Sell the spread, sit back and wait. It's a very simple idea, and you obviously have to manage it. So we can do it. You've seen it. You've seen the numbers. You've seen the chart from before. The proof is in the pudding, as they say, and the success rate is probably a little higher than 90% if you count only the credit spreads, but we're not going to squabble over it. The spirit is we succeed on most of the trades. What goes into getting these results? You got prerequisites, obviously. You got to have your account set up. You need an online investment account, obviously, and you have to have it set up properly in order for them to allow you to sell spreads. And every provider is different. You got to check with them what kind of forms they require, and they usually also require. I don't have any specific deltas. I see that question come by, but I'll answer that a little later, actually. So you have to set up your account properly in order to be able to sell covered calls, or at least credit spreads. You have to set a budget, and usually I get asked that a lot by students and members. How much money do I need in order to make this kind of money? I hate that question. That's the first question I would ask, by the way. I don't hate them for asking it. It bothers me because then I feel the responsibility. Oh my gosh, I'm gonna take this person's. I'm gonna put them in. But the bottom line is, take enough money that you think you can afford to lose. Then you can sleep at night, regardless of what if it's 20,000, 5,000, 2,000, 30,000, 100,000, whatever it is, it's different from one person to another. And I usually don't target a level of income because then I may just psychologically force myself to take trades I wouldn't usually naturally take in order to hit a certain target. When in doubt, stay out and then figure it out. You need basic option knowledge specifically for spreads, and you have to understand what's at stake, how much you're risking. Risk control is hugely important in this business. And you need, if you're not sure of any of these areas, please get qualified help. Everybody has it. It's all over the internet. But Kyle showed you why Marketfy is a little special. First of all, they guarantee everything. And if you jump in and you think that we're full of it, then you can jump out at absolutely no risk. And he wouldn't do that unless he knew what's the quality of what's provided. The service is outstanding from their perspective. I mean, I'm a beneficiary of their service to how they treat their clients as well, because I see it firsthand and it benefits me directly. Okay, now the ingredients are simple. It starts with a watch list. Watch list without it, you're just throwing darts. You have to maintain a watch list. Don't take a mile-long watch list. Mine is pretty long already. I have about 30 maybe, but I run through it every day at least 3 times, multiple times I should say. I'm not going to commit to how many times. But that's all I do. And I don't do anything else but run through my watch list and everything that's attached to it. It all starts with the watch list. Why do I maintain a watch list? I want to develop a feel for the movement of the stocks and indices I'm watching. And when I'm working with the same list over and over, I add to it, I delete from it. The other day I kicked somebody out. I can't remember now who it was. AutoZone. I kicked it out. High-priced stock should be good for me, but it isn't. And for some reason, it doesn't give me good premiums, and it trades in $10 wide spreads, and that just undue risk. I got tired of it. I threw it out. Okay, now the watch list is really important because you develop the feel of it and you have to run through them, but you also have to maintain with their information. So anything any news that's pertinent to them, you have to keep on top of it. Now from the watch list, you got to start developing thesis. I usually have a global thesis about the whole market, and we'll talk about that a little later. And then from that, you say, okay, given that this is what's happening with the world, what's likely to happen with this particular company? And then that develops into a thesis for me, and I have to keep retesting it. And I'll use a real live example today for one of those theses from Visa. If I forget, Kyle, nudge me, please. It's pretty important. And you got to spend some time. Okay, once I develop a thesis about, say, Visa, I got to spend some time to set up the potential trade for Visa. And I usually have more than one. I set them all up, I save them, and then I can start comparing them. Okay, I like this one because of that. I like that one because of this. And then I set them up and I run through them every day. Every day I go through all the trades. Some of them get thrown out. Some of them get copied over and changed a little bit. So you got to set it up properly. And then once you open it, you got to watch it like a hawk. Somebody today, man, this is all opportune. Just today, maybe he's with us today. He's always with us. He tells me, oh man, because I sent out a trade alert, and he's a member, and he's also a contributor. He comes with ideas, challenges me all the time, but he's still with us. So we had, he tells me, oh man, I missed the superb exit on Visa. And because today it popped 4% in a few seconds, and I was one of the first ones to catch it on Twitter. And so he said, but I still got to close it at 12 or 14 cents or whatever. So he still made a heck of a lot of money, but he's complaining about making from 30 cents down to 12 cents. So he's made the difference. So 18 cents over a not too long period of time and relatively safely. But that's the kind of comments that make me happy, because he's even a little upset that he could have made a little more because he wasn't watching his position. But in this case, he didn't do anything wrong. He made money. That's the bottom line. So you got to watch over your positions. And if you can't do it, then you definitely need help. I'm watching my positions. I send out a zillion messages a day. I had somebody today tell me, "Yo, you send out too many pieces of information," but then he goes in the next sentence, "Oh, I love it," and blah blah blah. So yes, I do over communicate. So just ignore it. I get tons of spam every day because I want to catch everything. I'll filter the spam. I don't care. But I don't want to miss any little pieces of information. Benzinga sends me a whole bunch of pieces of information every day. I mean, I get hundreds of emails, hundreds of texts, but I subscribe to them because I want to know everything that's going on. So I filter the spam so you don't have to. So that's why my members, that's one of the huge benefits that they get. Yes, they may be able to do this on their own, but they won't have somebody watching their backs all the time. You have to keep with the news. We just talked about that. Sign up with the with the companies for them to tell you when they have forms that they submitted to the SEC, for example. Very important. CF and Priceline are two important ones that I keep track like that, because they do move on insider selling and insider buying, blah blah blah. So they do move. You have to be you have to get better in technical analysis. I don't use technical analysis to make a decision, but I sure use it to see if my decision is correct or not. So if I set up a thesis, if I develop a thesis, I set up a trade and I play, before I place a position, I go to my technical analysis and I see if the technicals agree with my trade setup. What if I see that, it all looks great on paper until I look at the chart, and then there's this pointing that way and this pointing that way, and oh my gosh, maybe I should think, maybe I should wait, maybe I should wait until that technical blip unfolds and see really, maybe the market profile is telling me this. Like, yes, something may have spiked, but maybe it's just a tail and there were really no buyers up there. And I used that in Priceline. I showed a Priceline this month, the last couple of weeks, and I made a good sum because I saw that the price it got, remember when it jumped up a huge recently, hugely a big jump, and it didn't get followers. Yes, it got the high price, but it was just like a Medusa tail upside down. I call them Medusa. English is my third language. Medusa, what the heck is a jellyfish? Long strands. So there were no follow-up. So anyway, a lot that goes into the ingredients of having a successful credit spread strategy. I don't want to scare you away because really you do have help out there. And we offer it, I offer it, and we'd love to have you among us because it takes away from the burden of, oh my gosh, now you've got somebody, now you just text message, boom, it pops on your phone. We all have smartphones, at least most of us. You get an email, you do. Somebody yesterday, 2 days ago, signed up on Friday, I think 2 days ago, asked me and said, okay, so I don't really need to know what I'm doing. All I have to do is just do what your email says. I hesitantly said yes, because that's really what it is, but I also spend a whole lot of time sending all kinds of information as to why I did this trade, and hopefully that they read it so they can understand it. I don't want to just blindly follow me. So, but yes, that's basically it. So he said, okay, I opened the IWM long, tell me when to exit it. So I thought that was cute. But anyway, so get help. There's help out there. Okay, thesis. Let's talk about this. I mentioned this last week. I mentioned this yesterday. I'm going to mention it again today. In mid-June, I had a presentation where I used a thesis, and then mid-July, I had another presentation where I said, you know what, my thesis is still alive. I'm going to use the same one, and I brought the same overhead. And guess what? Yes, my thesis is still the same. Global thesis is still the same, which drives everything. I agree with better over communicate than under communicate. I'm just reading. So my thesis is, there was a debate between top T market, market tops, everybody, pulling this way. One thing was for sure, nobody knew. So I was like, okay, everybody says most hated rally this, and I tweeted out today to one of the technical analysts out there that it seems like 2013 is two themes going on as far as rallies and pullbacks. It is, yes, it is the most hated rally, as they say, although I think by the bulls saying that, it sounds like they've got a chip on their shoulder. And the most, in my opinion, I add to it, it's the most anticipated pullback ever, and which probably will cause it not to ever come. It's coming in little dribs and drabs. We keep going up a little bit, and then we fall from the super tops, and go up a little bit and fall from the super tops. So I really don't know how this is going to resolve itself. But you see how I talk in the third person for bulls and bears? Because I'm neither. I'm bullish in nature, but I take bearish positions, so I don't ping myself any which way or another. I really don't care where they stand. I just want them to stay away from my positions. So fight it out. Just keep in the range. So my thesis was, okay, yes, we're toppy. Nobody can disagree with that, right? That doesn't mean it's a market top. It means that we can still go up a little bit, or even a lot of it. So what I do is, everywhere I looked, I saw places I could short. So I shorted as little as I can because I got hurt shorting before, and this year has been a tough short, especially in the small caps. So I did see opportunities to short everywhere, but I also didn't see the doomsday scenario that everybody was talking. Perfect example, Apple. Apple this, Apple that. Everybody ran it up to 700, and then, oh, fully on Apple. Apple sucks, it's rotten. And suddenly everybody sold it from 700 down to 400, and then when it hit 390-ish, I went on record with the service. I posted here on Twitter. You can look at it. I said, this is the bottom in Apple. So I threw a whole bunch of credit put spreads. I went bullish Apple. I said, if I can't risk my money on Apple, I should close shop and go home. If I'm worried about 150 billion in cash where they can buy themselves to the top of any industry out there, there's no risk to be taken. So find the opportunities, go along them like Apple, and that was my thesis. So this is what drove all of my trades. So I looked for opportunity to go long Apple, go long Google, go long Priceline, and I hedged by going short at higher levels, or little hedges here and there. So the general strategy was very sane and very relaxed and stress-free. And I tried to go short the extended. Recently went short a couple of retail on their pops. And as of today, I'm still a little ahead of the game there. So sometimes the hedge is not warranted. I just go long. Like on Apple, I went long, and I didn't need to hedge. I did not worry about the hedging. So that's the thesis. Here's a visual of it. I was about here when I made the thesis. Yeah, we dropped back, and then just days later we were right back where we started. So it was solid thesis. The range was there. Yeah, we're going to meander basically. So in the July presentation, I gave 3 trades, and here they are. This is one of them. One was the NASDAQ, and I'll talk about the NASDAQ a little later, but the NASDAQ, the global thesis applied. Orderly correction, we got tested hard, and we kind of saw the abyss, and it wasn't that scary. So I said, you know what, I'm comfortable going long the NASDAQ about 4 to 5% lower than what it is right now. And these are a couple of trades that would have paid either 80 cents a contract. That's a heck of a lot of money. And it had like 85% success, chances of success with about 4% buffer. So I was 4% away from trouble as far as current price at the time to short leg. And then, or I could have gone even safer with an almost 6% buffer, bit wider spread, $25 spread if I've got the margin for it. It would have paid me 2.5 or 2.4 with an even bigger chance of success. And I could have added on top of it a credit call spread that also could have expired. All these expired worthless for maximum gains, by the way. So had you just taken these, you would have made your house payment. Just saying. So this was one. The other one was the SPX. Again, same thesis. I took a trade of 1565, 1560. Actually, I took that same trade for the portfolio only through the SPX PM, which is PM settled. I like to do that because then you can trade it on Friday. Only available for monthlies. But we actually took it a little more aggressive, but at a later time. So it was actually a little less aggressive. And we collected less money, but it was almost a short, I think it was like 35 cents or something. But it was, we banked it all the way down to zero. I think I had them close it at 5 cents. And expired worthless for maximum gain almost for them. But if you hadn't closed it, then definitely for maximum gain. This one would have paid you, if you did 10 lots, $850. And you wouldn't have sweat it. It would have been easy money. Famous last words, easy money. We also did a third one with the small caps going long them for a July point in time. I told you that this was the middle of July presentation that we did, and these are the actual snapshots that I used for them, so it's untouched. July 960, 950, the 5 credit put spread, that would have also paid the whole amount. And it was, I chose my levels. You can see here, you can see bam, 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 and my level was just under that trend line. So, and I usually have a few buffer zones here, a few, although these are not actual bounce levels, but machines look for them, so they're going to provide some support, at least some psychological support, and it does work. So this was the third one. So had you taken 1, 2, or 3, or all three, then the house would have been paid for, the cars would have been paid for, and all this at, what is it, 95, 88, and 85 to 90% chance of success. How much better is that than a coin flip had me just buy the SPY or buy the RUT at the money and hope for up or down? Way better. Yes, less potential money because I'm stepping away from trouble, but a good sum of money at I sleep better at night. So these are the 3 trades that kind of embody the whole spirit of this. The thesis that I talked about still stands until now. Just today, this is a snapshot today. This is perspective, people. NASDAQ 20-year perspective to illustrate my point. .com bubble, you see it. Where are we? Right inside the .com bubble. So we're in nosebleed territory. I don't care what they say. So we are toppy. And even with all this, we're down 4 days in a row, 3, 5 days. I don't care. We're still toppy. The thesis is still the same. We're toppy. We could still go higher because we actually did here. The slope is a lot easier than here, so, which makes it a little more valid. It's kind of like a bodybuilder, pumping iron and taking steroids for a week and just then, or you can do push-ups and sit-ups for years and years and build a good base. So, but we are toppy and we could go higher, but I don't see a doom scenario of like down here. So anywhere between here and here is going to be a playground for me. So the thesis is still stand. Toppy could run up a little bit, no doom scenario. Pick and choose good names and just play them for the long side and hedge where appropriate. That's the bottom line, and that drives everything I do. So why not do it alone? Yes, you can go and jump in and start selling. Oh, it's easy. I'll do it on my own all the time. You could. It gets complicated very fast. So experience counts. You got to have the experience. So until you develop your own years and years of experience and pitfalls, there's so many nooks and crannies where I call them little lessons, tuition. I've had them, you get assignments every once in a while. I haven't had them in a long time, but you get assignments and then you find out, oh, wait a minute, I was assigned, I was short something and they paid dividends. Then I owed a dividend. It's like, yes, yes, and yes. So surprises come up. One big caveat, I forgot to mention that. Never, ever, never, ever, ever, never, ever sell naked calls or naked puts. First of all, if you sell naked calls, if I can see your answers, if I ask what's the maximum you can lose, hopefully I see nothing but infinity. Yes, your losses are unlimited. Why on earth would you want to take unlimited risk? On the downside, your loss obviously is 100% just like buying a stock. So never ever naked selling. Always cap. Know what you can lose. Risk management, period. Okay, sorry about that, jumping back and forth. Very important though. So it can get complicated pretty quickly. I have one of our members, really good guy, his name is Neil. He tells me one time, I'm embarrassing Neil maybe if he's here. He tells me, sends me a message one time, I'm embarrassed to say this, but I seem to have gotten myself into a trade that I really don't understand what I have right now. Can you help me out? So I'm looking at what he has, and it's like, okay, it looks like you did this, and you did that, and you did this. The good news is you made money, and the even better news is that you can get out of it and book the money. So he was all happy and all fine and dandy. But it can, and he's experienced. He's been doing this on his own for a while, and he decided to prepay a whole year so he can get my ear, and that was awesome. So great to help him out. Again, it can complicate it really quickly. And it is simple, it's repetitive, it's the same thing over and over, but when done right, if you do it correctly, if you do all that is needed to be done in order to get all the success you can get, it can really eat up some time. And you're busy enough. If you're busy enough, you're going to need help. I have a lot of experienced traders, like the one person that was, missed out on the Visa perfect exit. He's experienced. I have another person who's also experienced, trades 3 times as many as I do, but he doesn't have the time to do it. So he set up an auto trade account, and anytime I place a trade, he placed 3 of it. Actually, more than 3, a little bit more than 3. So if I do 10 lots, speaking of lots, by the way, all these numbers that you see in the portfolio, the numbers that we've done 2,200 or whatever August to date, these are based on small orders. I'm not taking more than 10 lots, trying not to, so not to intimidate the members. So I don't force them into taking more than 10, but in real life, I would be doing 20, 30, 40 lots of the same position but I don't want to force them into doing that kind of lottage. So they're making more money than what I'm making in my portfolio with the same trades. So these numbers are on the conservative side, magnitude wise. So that this person is back to him. He's busy, so he's got an auto trade set up. Every time I do one, they do 3 and change for his. And so he knows how to do it. He just doesn't have time. So he knows what we're doing and he's okay with it. And he's actually got 3 different accounts. But anyway, so that you can do it. It's repetitive, but it is time consuming if you want to do it correctly. So that's why my tagline, I like it because it's really to the point. Give yourself a raise. Otherwise, you probably end up giving yourself a new job. If that's what you want, that's great. I do have one really good friend of mine, and he also joined, and he's got a good, healthy account that he trades, and he uses us to either trade like us, or he sometimes gets a little more aggressive, but he takes the spirit. Like if I go long Visa, he'll go long Visa and will be more aggressive for a little more money because he knows what he's doing. He's on top of it. And his goal is to become his job. He wants to move away from whatever he's doing and do this full time. So until then, unless you're doing that, you really should get some help. I mentioned Visa. We jumped in. You got to manage your trades. Okay, we jumped in long Visa. We had a big pad. First of all, if we didn't have a good big pad, we'd be in the money, wrong in the money. We'd be underwater by now. But because of my conservative nature, the Visa trade was tested. And we took in 30 cents to open it. At last check during the 172, I think Visa went down, was, I wish I brought up overhead for Visa. Anyway, it jumped up to like 60 cents. So I had everything lined up and ready in order to protect myself. But the thesis still was strong. I mean, I knew the price action was not all that bad. So today we got a 4% pop. Guess what? I jumped over and said, get me out of this trade at a profit. So we all jumped out of the trade at a profit. So we made money getting out of a troubled area because we got a 4% pop. So they're saying, well, they could have run. Yes, they could have. But guess what? I don't trade headline stocks and credit spreads because this 4% plus 4% headline could have been minus 4% headline. I'm not about that. Then our trade would be in serious trouble. The 60 cents would turn into $1.50, and then it's like, oh my gosh, it's only $1,500. So stay away from trouble. So the Visa was a perfect example. Yes, we got out. Yes, we made money on it. It was the right thing to do. It may have not been the perfect thing to do because perfectly it's like if you could see forward and you know it's going to expire worthless at the middle of September, then you would ride it out. And but I don't want to put your money at risk based on a 50-50. You know, the headline could go 50-50. It could have gone MasterCard's way. So I'm out at a profit. Do it every time.
Hey Nick.
Okay.
I got a few customer questions. Actually, I got a lot of questions coming through, and actually, you got a ton of your customers in here, which is really cool, and they can attest to everything you're saying right now. Can you go over a little bit of your adjustments? So one of the things I love about your trading is in your thesis, when something starts going against you, you don't got to keep it. You can move it. Go a little bit deeper into when you adjust and how you adjust.
Okay, it all depends. It depends from Let me see here. I'll use a perfect example. We were in a Google, I'm talking from memory here. August, it was a bullish position in Google. So it's a credit put spread where we sold the put spread. We collected, I'm going to say 30 cents to take a position in Google at around $860. When Google was way above that, it was probably closer to 900 or 895 or something, or maybe a little over 9. I can't remember exactly what. But the bottom line is we took a position, conservative position, long Google via a credit put spread for August, 860, 855. So we sold the 860 put, and we bought the 855 put. When we sell the 860 put, that creates risk. We buy the 855 put to limit the risk to $5. We collect 35 cents or 30 cents, whatever it was, and we sit and wait. And then Google started puking, and again, bam, bam, lower, lower, lower. Even before it was even close to 860, I reset the trade to September 6th, I think, at low eights. I can't remember exactly the level now. I'm speaking from memory. But that's, if you wait and hope, anytime you say, I hope something, then you should get out of that trade. So the one, I think, Kyle, there's no one formula. Oh, when this happens, I do that. But the one thing that's hardest to understand and easiest to do if you really push yourself and get emotionally uninvolved with it is, the most important thing is not closing the trade worthless for maximum gain. The most important thing is staying out of trouble. So I saw trouble coming, I'm out. And actually, I probably collect more money to be out because the punt was a credit. So now I collected the 35 and the 30, 35 initially, and then I probably collected another 15, 20 cents to move it, or 10 cents, or even money. And so I punted it down, lower, and out in time. I could have chosen to punt it down lower within the same time frame and paid a little bit. And then what I would do is I would open an opposite position to it as a credit call spread, which is basically betting against my current position to offset the cost of it. So it'll be cost neutral, but now I have an iron condor on it because so I can punt it that way. Now, let's say that position with Google, the 860, 855, was already part of an iron condor, then the decision would have to incorporate, okay, I collected 30 cents from the bottom, I collected 30 cents from the top, 60 cents is my break even. So if they're at my break even, I'm still not jittery because I haven't lost anything yet. I can close the whole trade right now for even money because I made money on top and I lost money on the bottom.
Cool. Nick, we got a bunch more questions, and everybody, we're going to get to all your questions, or as many as we can to tonight.
This is an important question right there. Somebody's asking, is this a signal service training or both?
Yes, it is. It is both, and we're gonna go. I'm gonna go over there right now, Nick. I'm gonna take the screen back from you because you've been hogging it for too long. I got a lot of questions about your product, Nick. We're gonna run over some of that real quick, and then we're also going to Michelle. We're gonna talk about the course right now. Rob's asking about your course. Jack says you can't trade on hopium. No, Jack, no, you can't. Robert, I'm gonna go over the course right now and the service. And then we're going to go back to Nick for some more questions, like how do you measure your success percentage? What are the time frames of the trades? We're going to go, Bob, we're going to go over a losing trade for you. Nir, we're going to talk about when you lose a trade, what's the max you allow? One of the great secrets about Nick, and he teaches it to you, is how he actually makes those adjustments when it happens. So, I've seen so many times when his students will come through or his subscribers will come through and, things are going against us and we hedge or we turn it into an adjustment and it ends up working out really well. So we'll go over a lot more of that, guys. So keep the questions coming. Real quick though, we went over a little bit of a strategy tonight. We did an introduction into a lot of the trading for a lot of the newbies to credit spreads. But this is Nick's full course called Mastering Credit Spreads. The entire course is on demand. You can watch it whenever you want. You can see the lessons here, 1 through 4, the introduction to options and option strategies. We go over the credit spread strategy, and then we go over Nick's secret sauce. And that's truly what produces the 90% probabilities. It makes sure that the risk on the stuff that we might lose is not very large. And you can see the bonus lessons below that, how to manage a credit spread under pressure, winning trade setups for a topping market, and boosting your income using credit spreads. Okay, so there's also some extra bonus videos in there. Now that's his course. The trade alert service, which is called Create Income with Option Spreads. You can see the goal is to create weekly income from low risk trades. It's about finding high probability, low risk, consistent income. So if you're sitting there and you've had trouble getting consistent, right? We've all won trades and we've all felt like Superman or Superwoman where, you're not going to lose, or I don't need anything else. And then you have a bad week or a bad month or a bad year, and all of a sudden you question everything you do. That's why Nick's a professional, and he's helped so many people on all levels of expertise, continue to consistently profit. He concentrates on solid companies and avoids chasing the trades. And that's where the high probability comes in. You can see, and I'm going to go over the actual verified performance, but Nick shows how much money they've made since March. And actually, July's not even in here. What'd you do in July, Nick? Do you remember off the top of your head?
No, let me see.
We'll
July,
go.
probably like 1300, something like 1250, 1270, something like that.
Okay, I'll take a look at it. And then what you get, so you get, 3 or more stock option trades per week. Nick also goes over a lot more than just that. So at the end of the week, Nick does something that I absolutely love with his students and subscribers. You can come in and ask about any stock that you want, and he spends his entire Friday night putting up the charts and doing analysis on it for you. So you can actually get more than just what he's trading. Clear write-ups for every trade, so it's not just an alert. Now, if you just want the alerts and you want to auto trade, you can. But moreover, he goes over the actual thesis with you, so you can start trading. Somebody asked a question in here, and I'm not sure who it was, but if Nick's trading, with the alerts, doesn't he get in before? He talks about the trade before he makes it. So a lot of his students actually make more money than he does, which is one of my favorite parts of his service. Real-time trades alerts, you get them both in text message and email. And the great thing about Nick is it doesn't matter if you're just starting out. He is amazing with the novices and the beginners, or if you're a few years into it and really just struggling for a solid strategy that makes money. This is the guy for you. And Nick, I'm going to go over a couple of customer conversation and testimonials. I got a bunch in here. Pete's coming in talking about Nick. I mean, there's a bunch of people coming in talking about Nick right now that are currently subscribed to him and currently making money. So we'll go over some of that. But what's been really cool about the education week is all of these guys that we run into Marketfy, we're selling this stuff off of Marketfy. Now they're verified. Now we know what they do. And it's through these education weeks that I come in and I tell Nick, like, look, these are my customers. I want you to, I want to get them in and I want to help them start making money. And that's why I get to package some really cool deals for you guys. And this is what Marketfy does for you. So we got 3 different things tonight. We have the student package, which is all of this learning material through the Mastering Credit Spreads course. We just went over that, the 4 lessons and then the 3 bonus video lessons. You also get private messaging with Nick. Nick, I asked Serge yesterday in yesterday's webinar. I asked him, he said he got between 30 and 50 messages a day. I know he's not even close to how many you get. Do you know how many Monday through Friday you get on average?
No, but I get a lot, and I don't mind them, and I usually answer them within seconds. And every message you'll see, oh, thanks for your quick response. Thanks for your quick response. It's a responsibility that I do not take lightly. It took me a while. I've been trading for a long time, but I haven't been leading people for a long time as far as trading is concerned. It was a transition period where I was like, oh my gosh, but I do get a ton, and I love all of them.
Cool. No, I monitor the messages too through our support, and it's fantastic. So you get all of that just in the student package.
Wait, Kyle, can you hand me back I think I need to show something.
Let me. You want me to go through the offers, and I want you to show a couple of those.
Okay, go.
Cool. So in the student package, guys, you get all of the lessons. You get all of the private messaging with Nick. You get the 24 support from Marketfy. Typically, that's $100. The package, it's $99. The Mastering Credit Spreads. For the education week, which is great, it's only $49. If you're looking to learn, if you're a student, it's $49. Use the coupon code STUDENT. I'm going to have Nathan here, who's helping me with the chat, drop the link for that coupon code, and the link will automatically apply it for you. But if you're, and I got a lot of people in here right now that are not just looking to learn, they're ready to trade. They are ready to start profiting consistently. They are ready to watch how a professional has made 90% trade wins, not just for him, but for his students. And the application of what you learn is truly what's important. So yeah, the student package you learn, but the true value from Nick is when you're applying it. I said this yesterday, when you apply it in the markets. So if you're looking for this kind of low risk, high probability, consistent income, the next package gives you 6 months of trade alerts with Nick. So inside that, create income with option spreads product as well. You still get everything from before, all the learning, all the private messaging, all the support, but now you're actually in his community of subscribers trading with them. And these are the customers that are doing it and making a lot of money. You get his daily trading notes, all of his blogs that he does, all of his videos and member webinars, and you also get 2 hours of one-on-one personal coaching. And what this is okay, I need a little help getting started. I want to set up my brokerage account. Can you show me what you do on your screen? I want to watch the markets with you. Can you sit with me for an hour or two and really go through it with me? You get all of that. We call this the income package for a reason, because these are the students that are making income. These are his subscribers that are making consistent profits. That's usually $1,549 for the whole package. And that's 6 months of trade alerts, which is well worth it because they're averaging a couple grand a month. For today only, the next 24 hours, we're only doing it until 6 p.m. tomorrow night. It's $399. The coupon code is more income. Nathan's going to drop that code in right now. This income package is unbelievable. I had to fight with Nick to allow me to do it this low because this is his business. You got to remember that. And we want to show you what everyone else is doing right now. And I'm going to go over a lot of those customer testimonials and reviews. And I wish I could have Pete and Andres and Neil talk right now to you guys to show what Nick has done for them. The beginning slide talked about 90% probability changing traders' lives. I've witnessed that. I've witnessed that through Nick's product. And that is definitely the best deal. Now, the last one is the VIP package. Now, this one's awesome. This one's crazy. You get 12 months. So you get everything you get in the income package, everything you get in the student package, but instead of 6 months, now you get 12 months of alerts. So an entire year. Most people buy an annual from Nick, and it's usually $750 for the annual alone. But this one is for people that really need the VIP treatment. These are for the traders that have really struggled over the last couple of years, the ones that have blown up accounts, and we all know what that feels like. We all know what those losses feel like. These are the people that really need a lot of one-on-one attention to get back on track. Nick charges, in deservedly so, $500 an hour for personal coaching. Because you got to remember, if he's trading Monday through Friday during the market hours and has all this other work to do, when he's not, that's his family time on the weekends. He loves doing it, but that VIP treatment, that's really valuable. This package would usually be $6,000. Today only, it's $1,919 or $99. Sorry, $19.99. The code is VIP. Like I said, if you really need to get back on track, this gives you 10 hours of personal coaching and an entire year of these returns that we're talking about. And you can auto trade those through Thinkorswim or Trade Monster. We have a bunch of customers through Marketfy or Trade Monster and Thinkorswim that just completely auto trade them. They just allocate a certain amount to them and just click go. And we'll go over a little bit more of that later if you guys have some more questions. So I see a ton of stuff coming through. Let me rip through a couple of these. Bob Barrett and Nathan, make sure you drop that link to the VIP in that chat for us. Nathan's gonna drop that link for the VIP. Make sure to get in here, guys. I'm gonna go through some questions real quick. Bob B asked, is Nick's auto trade set up with Options House? It is not right now. Options House does not offer auto trading anymore. Wayne, is the income package $399 for 6 months or $399 per month? It's $399 one time. These are all one-time purchases. You get the 6 months for free inside there. So the $399 is a one-time purchase. For $49, $19.99, all of it. Yes, sir.
Kyle, give me back the controls and take it back. I just need to show something that goes to what you're saying.
All right, cool. Let me do that right now, buddy. You got the presentation. Okay. Go ahead.
Okay. Here are things that don't show up in the statistics. This is an email I sent out the 19th. And I send these out throughout the day, throughout the week, all the time. This says private, so you're getting a freebie here. It means when I send it out, none of the people that are on the mailing list that are not subscribers or students get this. So this is just for whoever subscribes. This is a detailed write-up of my thoughts about Ralph Lauren at the time. And I not only do I give my thesis and what I would do with it, I also show it in, okay, this was the action, price action, and I said that it was being tested. And then if you want to read this whole thing, you can. But the bottom line is I had a setup saying, okay, I'm looking to go long it at 155, 150. So I was going to go long it down here. And then I also had another setup for 160, 155. And a whole bunch of people took this trade. I didn't take this trade for the portfolio, even though it was 95% chance, because I had a couple of things going on and I needed to settle one or two before I jump in. So, but the bottom line is the students and members that did take this, they made money because I know it's higher than that today. So these do not show up in the statistics. So yes, I do have a 90%, but the numbers you see, the dollars made per month, are so much bigger than what they actually are because of trades like these and recommendations like these. This is just one. I know that day I did Goldman Sachs was in there and a couple other ones also were in there. So IWM was in there too. Okay, you can take it back. I just needed to make this point.
No problem. I got a couple of your students in here saying, "Go get him, Nick," when you're trying to take the screen from me. Cruz 351, Bill. That's funny. I know this is what Nick does to me. I get all excited. He's got to calm me down, guys. All right. Before we go back to a lot of the questions about your strategy, I just wanted to show a couple more things. And folks, this is what my job is. And the cool thing about being on Marketfy is everything has a guarantee, and it has the security and the transparency of what my job as a company is. And that is to make sure that what Nick is doing is real, what Nick is doing is not malicious, and that his students and his subscribers are being taken care of. And I have an entire team for that, okay? We monitor all the messages. If we see stuff that we don't like, we will contact the subscriber and we take care of you. And Nick's students from us get the 24/7 trader care support. They get fully certified, verified products, which you can see the badge up there, Marketfy certified. They get real results. We're going to go back over that graph because I got a lot of people asking about contract size and a lot of people asking about, what we want to see some losses. We want to see all the wins. I'm going to go over that in a second. It's all real. Nick makes the trades on Marketfy like he does on a brokerage, and then we send them to you in real time. So he can't fake what he's doing. And that is so important, guys. That's what Marketfy is changing about the industry, about all the products you bought in the past. Something fun. I have a bunch of people in here that got it last night. A free gift from Marketfy for anyone who buys today. Nick, I'm not sure if I know you drink coffee, but we're sending everybody a $50 gift card to a good friend of ours. He owns a company. He owns a winery. So we're going to send out a $50 gift card for wine for anyone who buys today. Just
Nice.
something fun. We're all people. We're all in it to live. So we thought that'd be kind of cool. And I know that on a good day I like a glass of wine. On a tough day I like a glass of whiskey anyway. So, and then what's really cool too is whenever you subscribe to Nick, whenever or any other product at Marketfy, there's always a money back guarantee. We're not here to grab $75 from you a month. We're here to make sure you're making money long term. We want to make sure we do that. Okay. So let's get to some of these questions about the performance. Usually Nick is trading in the portfolio. Nick, you can chime in here. About 10 contracts. The quantity is 10 contracts for the spreads, correct?
Yeah, most of them, at least most of the recent ones, are 10. The defensive spreads are usually a lot less than that. And they just give me a little more time to react for the oh crap moments, as I call them. So yes, usually I do 10 if it's a $5 spread. So you got... it's a $5,000 requirement as far as margin catch against it. And by the way, if you're new to options margin, when we say margin in the options world, it's not the same as when you buy stocks. When you buy stocks on margin, you're actually physically borrowing money. Here, you have cash in your account. When you take an options position, short options position, it requires you to have enough cash in there to cover the entire loss should it go all against you. So if you're putting 5,000 at risk, you should have 5,000 in cash, and they'll lock it up, and you can't use it until the trade is done. Either you buy it back or it expires for maximum.
Yep, correct.
10 loss. Yep.
And Cruz asks, is 10 a good contract size? It just depends contract size. it depends on what's right for you. Nick was actually telling me a story before we got on the webinar today. He's got some of his subscribers that do 30, 40, 50 lots, contracts per spread, whenever he's just making 10. So
Yep.
it really just depends on what's right for you. Joan, when you're auto trading, it just depends on how much money, again, that you feel comfortable with. You can, I think auto trading with Thinkorswim is a minimum of 5K. But if you're only doing, one contract per spread, you can easily trade with 5K with Nick. It's not day trading, so you don't need that minimum of 25. WRW taxes. He said, is there a track record for Nick's trading available? I got the track record up right here. These are all of his past trades, closed trades.
It's online. If they go, they can see all the
Oh
past
yeah,
closed
oh yeah.
trades.
I'll drop a link to that too. That's all on Marketfy, folks. That's what we do. I'll have Nick drop, or I'll have Nathan drop a link in the chat. But these are all the closed trades since May 21st. So I just took a screenshot and I wanted to show you guys. If you click that little plus button, it'll actually pop open each leg, so you can view that as well. But this was just a spread entry and exit. You can see the P&L. You will see a couple of one contracts. Just to note, those are hedges against the position. So when we talk about adjustments and we talk about, market conditions might be going against us a little bit, Nick will throw a hedge on. Okay, so he'll throw a one contract hedge on, and that way, he doesn't have to worry about if this thing goes way against us, you're not going to lose. Right? When people talk about credit spreads, one of the biggest issues is they sit there and go, yeah, you win 9 out of 10, but that 10th one you lose, you get killed on. Well, that's why you make adjustments. And that's what Nick teaches you. And that's why his students are consistently profiting. And that's a really, really, really big lesson to learn. All right, what else we got here? I have, who asked the question about, Robert, you have to be inside the income or the VIP package to get the alerts. The student package doesn't come with the trade alerts. I forgot who asked that one. Okay, Nick.
Yeah.
Before we get back to the strategy, and this will actually go over a lot of it, I want to talk about your customers real quick and your subscribers and your students.
They're awesome.
I know you don't know this because you only see your product, but it is incredible the amount of feedback and the amount of engagement you have from your community. And I got a bunch of messages up here, and these are messages one-on-one that they've allowed Nick to use in the webinar. But talk about your traders. Talk about the people that you're trading with and helping.
Well, they first of all, they range as far as men and women. I have both ages. I can guess that they range in ages just because of the level of the conversation and the topics that come up. And as far as experience, I can tell that some speak the lingo, and so they're doing it full time, and others are complete new. I mentioned the one person that was completely new to doing this. So the whole spectrum is covered as far as I actually had a message from a perspective. He's not a member yet, but he did say that he was looking to join, and just literally 30 seconds before, maybe a minute before we started the webinar, and he said that he was actually running money for, and he mentioned the company in England, and I can't remember the name of it. So it's everybody. I do the spectrum, the whole spectrum is covered. As far as level of engagement, I did have a lot of people that say, hey, you're doing, first of all, the one consistent is that the response, they're impressed with the response time. Now I'm tooting my horn, but you asked and I'm answering. The level of how quickly I respond to them, I guess I should say. Fun moment here, and then also the details. I give a lot of details. I over communicate, but I stopped sounding like there's a panic because somebody confused it for panic months ago, and I said, oh, okay, no, I'm going to make sure to state exactly why I'm telling you this and why I'm telling you that. Like, for example, today I closed that Visa trade, and I sent out a note right after it saying this is why I closed it. So just so they don't freak out, or if they decide to keep it on, it would be a mistake. So I just want to make sure that they follow.
Yeah.
As far as I've had a couple of people that what?
Yeah, no, I just wanted to say, in Larry, the message we have up right now, we get this question all the time about, we have a lot of people that are retired with Nick, and he talks about supplementing his Social Security income. That's exactly what this kind of trading is great for. Whether you're looking for an extra revenue stream or since you're retired, you do need a lot lower risk, right? You always hear about that. Making sure your
Right,
risk.
but it still has to be with allocated money that you can afford to lose. It shouldn't be like your last dime that you're trading. I had that conversation with a family member the other day. What should I do with this money? I said, what kind of money is it? Is it extra money or is it your nest egg? So that the answer to that question is really important. So be
No,
honest
that's
with
very
yourself.
true, Nick. Because otherwise, you might as well go to the casino.
Yeah, exactly.
In one of the other things too is Nick always
Oh,
goes through, and this is a great example of this too. You know, a lot of ideas, and we had a bunch of people asking for the ideas that are coming up. Nick's trade ideas. Those are obviously for subscribers only. Buy the package. It's when you look at what they're making, we're talking about thousands of dollars a month. You're paying $399 for the next 6 months. Okay, you're getting this for 6 months. The return is, I mean, it's incredible. It's an incredible kind of deal. Okay, for that income package. But what's even more important is Nick was saying it. If you have other trades on, Nick can walk you through that kind of stuff because this comes with all the education. So if you messed up a covered call, or I mean, Nick, how many times have you had students ask you about, I entered a trade wrong, what do I do?
yeah, I do. I get that often, but well, not as often as I'm thinking about doing this. What do you think? Today, I had a longtime follower from Twitter, from like a long time, and he threw at me a couple of Apple questions. He was long an Apple spread. He goes, "What should I do?" I said, "Well, you're making money already. You should book some of that profit, if not all, or bet against it just in case it turns around against you." And since you're already long the spread, I would go aggressive just behind that spread because you've got the spread, the long spread to protect you. So it was more of, I'm thinking of doing that. What do you think? The other day, I had a lady who joined recently and is a really good, fun, and actually very happy member right now. And she had, okay, I've got these 5 trades. What do you think? Should I add more? Blah, blah. So detailed, I answered. It took the time, and she was new. I didn't want to say no, I'm too busy or anything like that. And this one here that you have up on the screen is it's from idea to money in the bank. Basically, the way it's worded, it's totally correct. It came up that he owns a stock, and I said, why don't you put it to work? And now he's doing it with this stock, Apple, and I think Google also. I'm not sure about that, but a couple of stocks where he's doing that. What is
Cool.
that?
And yeah, Cruz, you asked about
Cheers.
what contract size is good. Like I said, it depends on you. Nick does 10 in the portfolio, but he's got people that do a couple contracts at a time, all the way up to 30, 40. Nick, I want to go back to, you got a lot of people asking about your performance real quick. And I want to go back to that real quick. First off, we always, inside Marketfy, you'll see the portfolio is always benchmarked against something, and you'll see it'll be benchmarked here against the S&P 500. We'll be adding more indices and different types of tools for you to analyze as a subscriber. But what's really important is, I mean, look at August right now, right? Nick told you he's natively a bull, but in the portfolio he's a bull and a bear. It doesn't matter. He's agnostic because the truth is when the market goes up or down, you can still make money. And
Given the idea of credit spreads, when I'm a credit spreader, when I put a trade on, can I see answers as to what I want to have happen? I know all of students and members will come up with the right answer. Can you answer what you want to happen? The real answer is nothing. I want nothing to happen. I want everybody stay put until it expires. That's why I put the trade on. I take the risk. It's like me being nationwide insurance. I sell you insurance for the hopes of nothing happens. Hopefully you won't even drive your car. So that's the same idea here. I'm selling insurance and I want to nothing have happen in order for me to make money.
yeah, Bill, I'm going to go back over the trades so you can see how many trades he usually makes a month. Nick, off the top of your head, and I got Camarisa and Thoralfa that want me to pull up the packages again.
It slows down during the earnings period, so I don't want to average it out. I want to put one trade a day, ideally, but I don't. I would like to commit to 2 or 3 a week, and I don't want people to have 10 trades on because then you're just you have a lot of risk on it at one point in time or another. So doing 2 trades a week. That would probably be a real nice side income from somebody, provided they are successful with most of them. So again, you shouldn't stay too long. Overstay your welcome in a trade, even if it just costs a nickel to buy it back. Buy it back. Buy cheap, risk back. Why leave it on? I almost lost a trade. I told you, Kyle, the other day with the icon tweet, I was sitting on a nice $700 profit in Apple, and it was costing probably, I had an order to close the trade, and I was just messing around with pennies. I was, no, I don't want 19, I want 20 or 18 cents or something like that. And by the time I was going in to change the price an extra penny to get it, the tweet came out and Apple started running up $1. So by the time I caught up with it, it cost me half my profits. So, it's better than losing money, but it could have been that I lost money on it had I, don't wait. Cheap risk, close it, walk away. How many trades a month is ideal? As many as you can jam in, as many as you have margin for. This question is so hard to answer. If I have a $100,000 account, I'm going to put most of it to work. I'm going to leave, 30,000 in margin left. I'm going to use it up, eat it up. So as many as you can manage.
Yeah, that's a great point. And I got a bunch of people asking about the packages again. Here's the prices, guys. Again, the first one, the student package, we went from 100 to 49. That's for the Mastering Credit Spreads course. That's for the 4 lessons that go over everything from the basics, get into Nick's strategy, and it's also access to privately message Nick. Okay. Now, if you're looking to start actually making trades, not just learning, but also making the trades with him and his subscribers that are making money, you want either the income or the VIP. All right. The income, the difference between that and the VIP, you get 6 months of trade alerts here, which he usually charges $75 a month, right? And then 2 hours of personal coaching, which is usually $5 an hour. So that total would come to $1,549. It's only $399 because it's Marketfy Trader Education Week. All right. And the VIP package, if you need more one-on-one help, okay, if you need more one-on-one help, this gives you a year of the signals, a year of the trade alerts, a year of making money with his community, and then 10 hours of one-on-one time with Nick. Now, I don't know if you could pay me money to have that much time, one-on-one time with Nick, but if you're a trader and you need help, this is what you need, okay? If you need the links, just look inside the chat. Nathan is dropping the links inside the chat for you, so you can just click on the package that you want, and it'll automatically apply the coupon code for you in the checkout page. All right, Nick, I got a lot of people asking about adjusting a losing trade. Can you give an example of one that you have done? If I give you the screen back, do you have that up, or do you want to just talk about it?
I can give me the screen back because I want to show something else. But I'll tell you, I just went through the Google adjusting trade. I'm not sure if that was not good enough, but the Google, it was running against us. I didn't allow it to get to be losing. I simply punted it out, down and out before that happened. So yes, I still have the trade open, but it's in the low 800s, and Google is at 875 last time I checked today or something like that. So I'm out of danger now. And if it runs against me again, I'll punt it lower too. Okay, I'll tell you what I was going to do with the Visa trade. That probably would be if. Oh, by the way, before I do that, what you're looking here, this is extra stuff you don't see. By the way, I've got a famous thing on Twitter now, a crayon analysis. Crayon says this, crayon says that. Months back, I called the VIX dead on with the crayon, and I posted it, and I think it got picked up by Benzinga, so you can look that up. But this was just days ago, not too long ago, August 12th. I said crayon analysis updated, and what I said is, like, I see patterns. I see boom, 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 and peaks and selling and peaks, and I said, I bet you this is going to happen again. Don't, and then I drew this and I pointed an arrow to here. I believe the VIX was somewhere on here today. So even though it probably didn't hold up here, but you get stuff like that. And if you had traded, basically, if you went long VIX calls when I put this out, you made money. And this doesn't translate into the money a month that we make. So back to the Visa thing. Okay, we had a credit put spread in Visa 160, 155 for September. And we had sold it at about 30 cents. And it was making me sweat a little bit because Visa was selling day after day when MasterCard wasn't. So I'm thinking, okay, what the heck's going on? But the price profile market profile still didn't tell me panic. It was lower volume. So I said, there is something going on. And so I'm nervous enough to have 3 orders loaded up in the chamber. I didn't end up doing anything because I had my eyeball on it the whole time. That's all I had one screen dedicated for Visa, where I had few windows for volume and market profile and all of that. So I had 3 orders loaded in the chamber to defend against a possible drop. I mean, at this level, still Visa is a good deal. I knew it in my heart, but it was the headline that was scaring me. And I started seeing headlines come and go for legal issues because cap fees between Visa and MasterCard, and I didn't know exactly all the details. I don't think anybody does. But I wanted out of this trade, but not at a loss, and I think I thought I could have a handle on it. So I had 3 orders lined up for defense. I had weekly 170, 165 long credit put spread. I mean, put spread, long put spread, so debit put spread, and another one 165, 160 behind it, lower. And then I also had a long put spread for September, 170, 165. First of all, I sent out a note to everybody to put them on notice that I'm nervous about this trade, and now I switched it. I relabeled it almost hostile to where my goal is no longer to make money, but to get out of it with minimal damage. So that right there is a huge step, because now I'm not looking to make money. I'm looking to defend it. So now I can convince myself to spend $300 to actually build a defensive wall between me and trouble. So I immediately nixed the idea of the 160, 165, 160 weekly, because that would be meaningless. It would need Visa to drop a heck of a lot this week, and then I would have wasted my money. 170, 165 was a little better for the weekly, but then in my head I had right up ready to pull the trigger and tell everybody to buy the 170, 165 put spread for the September monthly. So against my position at higher, at a good chunk of money. I think it cost about $1.30 or 40. But I felt like it's money well spent, because I need time to be able to get out of that bad position should anything happen, should the headline come out. Today I'm watching it, behaving very well, very well. It's like somebody knew something, and then suddenly, bam, 1 second, and I could see whoosh, 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 and $1 up on it, plus 4% in no time. So I said, you know what? I'm taking the chance. So I opened an order, and as soon as that executed for me, I knew that the price was right. Sometimes when the price moves like that, the price is a fake out. It's not really there. It shows 18 cents or 15 cents to close when it really is not there. So I opened the order, and as soon as I triggered it, I sent out the note saying, close it, everybody. And sure enough, they all closed it at a lower price, because I jumped the gun, because I was the sacrificial lamb out there. So that's how I defend it. It wasn't in trouble. It was just making me nervous. I was uncomfortable with it. I still had a 5% buffer zone, but still I knew it was a headline stock, and I don't want to hold headline stock just with 5%. I'll hold a headline stock with 15 for 20%, but not with 5% buffer between current price and my short leg of 160. Hopefully that answers.
Yes, it does. Nick, great job. We got a ton more questions in. Nick, we're half over, dude. We are 30 minutes over our allotted time. We're going to stay in here as long as it takes, though, guys. We still have hundreds of people in here asking questions right now, and we just set a record with all the sales that are coming in and joining your community right now, Nick, and it makes sense. I mean, what you are doing for people is it's amazing. Nick, on your screen right now, I got people asking, what are we looking at right here? And this is obviously the product. Now you get the trade alerts via SMS, text messages, and email. But Nick, show what's going on right here.
Right here, what I'm looking at my screen is just that one VIX note.
No, the platform. You can show like that the activity feed is the blog. Show the Marketfy platform for people that haven't seen it. And what Nick's looking at right now is when you subscribe to the product, you can actually come in here and join the community right on here. You see the activity feed. You can message
right here. Yep, blog, videos, and portfolio. And I won't click on that because the members will be upset. That'll be giving away the house, right? So this is the Visa closing. This is the actual trade alert that went out. You will get that in an email. And we did make a profit on it. And anytime I can get out of trouble with a profit, I'll take it every day, any day. It's the right thing to do. Here was the Visa update saying that it had a spike. I'm not sure why, but we're all over it. This was the morning buzz. I'll click on that one because it's kind of interesting to see. Every day before the market opens, you're going to get this. And this is just a write-up of what I think is going to happen today. You know, pre-open, blah, 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 Fed, everything, blah, blah, Fed, this, Fed, that. What happened overnight with overseas and what's going to happen today. And then we have notes here and there every once in a while, and then I give you a visual of it. This is the ES, this is Apple and Google, always up there, and then the small caps and the NASDAQ and whatever else. And I was watching Visa, how I'm watching the lows and the highs after hours and during the hours. So that's what you get as far as morning buzz. And then in the evening, I usually, today it's late because of this, but afternoon tea, this was for members only, so I won't click on it. I probably have a couple of trades in there. At IWM note, a lot of people took this trade and they're probably in the money here. So that was a Visa trade note from the other day saying, okay, I'm a little nervous and here's why. This one actually, I'm glad you mentioned that. This one I got picked up by, I made a comment on JCPenney and I got picked up by CNN Money page and I was on their page. And here I am right here, Racer Nick. Oh, by the way, follow me on Twitter and or StockTwits if you haven't done so. It's at RacerNick, no K. And morning buzz again. So this is the stream, and then if this shows everything that goes on. But when you log in, you should see this on your side. You can go to the blogs and see nothing but the blogs. You can go to portfolio and see current trades and closed trades and all that. I won't go there because then I'll give away some. It's not fair to the paying members. And you can also click on the videos, and you can also contribute. Like if you were looking at this, you can make a comment right here. I'll get notified. I'll answer you, and we'll go back and forth for hours. Yeah, I know that's Kyle's favorite thing to do. So
It is.
This is what they get, and I know that. What? Go ahead.
No, I said that is one of my favorite things.
Yeah, so this is the platform. They built it really slick. It's not too cluttered. You can move about, and if you need help, there's always a live person during business hours to lend you a hand. I know I ask their help all the time. Hey, can you help me do this? Can you help this person do that? Like today, the gentleman from Spain, he couldn't sign up because his phone number has 11 digits. So I told him, sign up with 10, and then we'll retrofit it once you've signed up, and he did. So now we have that issue to deal with. We need 11-digit phone number boxes. No, we don't, actually, but it's good that I know I can rely on somebody to jump in when I need it.
Nick got a couple of great things going on. Cruz 351 has been asking a ton of questions. Just told us he's taking the 399. Welcome aboard, Cruz. Pam, Jacob, Nathan, welcome aboard. We got a ton of people coming in. Really glad to see so many more traders joining the community. Nick, I know you trade through Trade Monster, but do you also use their charts? And the person that asked the question was actually KB asked about Trade Monster commissions. Somebody else, David asked about the TradeStation platform. He's looking at joining that. You trade through TradeStation or Trade Monster, and 30 pips a day. That's the same thing. But where do you get your charting from?
Right here. That's Thinkorswim. Trade Monster is an outstanding platform. It was built specifically for options. It seems like they had options in mind when they built it. Thinkorswim, I enjoy more of. They have better charts, in my opinion. Well, different kind of look at the charts. For example, all the other ones you were seeing, they're right from here. I can maintain a watch list right here. This is a paper trading account. And for example, if I was looking at, what did I mention? Visa. Double click on Visa. It remembers everything I did with the Visa. Gosh, why is my computer running so? So you can see that's a long candle today, and it did draw back from here. But look at this, right? So what if this happened here because of a headline? That's why I got out of my, even though I was right down here, but this could happen here, and that was a headline. That was the headline. But I thought we were past that headline, and the reason why we went long is because of that nice channel. Ping, 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 ping. I was like, okay, we can ping it. And then when it broke that channel, I got really nervous. but then it broke it, and then the volume got weaker. You see those 3 ticks right here, low volume for these 3, so it was deciding, well, I want to go up and I want to go down. And that's why I had 3 in the chamber, because I was getting nervous about it. Even though in theory it shouldn't even come close. I mean, look at this. That's the 200-day, that yellow line right here. Look, nowhere near it. And then suddenly, damn, we're right there. So I decided that it's time to get out, and we got a gift today. And look at the heavy volume on that move today. So it was well worth it to get out. I would have gotten out even, but the bow on the gift was the fact that we got out making money. How good is that? I know a couple of people got out with 12 cents, so they made twice as much money almost as mine. I got out at 19 cents. So this is, you can look at they have other charting views. This was a different way of looking at things. This is RET. I usually use this one to look at the Japan. And since every morning, this is the Abenomic, the experiment with Abenomic, where he ran up the market. I wrote up and I said, no, maybe it's going to happen again. And look at that, almost exactly. And that was weeks ago. You can go look in the history. I mean, this, side things that you can't measure and put in statistics and say, this is what the service is doing. You'll be getting this every day. Every day you'll be getting this stuff. And if I'm not sending it, you can ask for it. I can also show you product depth as far as where the call volumes is concerned. Gosh, my computer is crawling. What's going on? So anyway, usually I can tell you, oh, that's because I'm on NKD. They don't have that. So let's say Google. It shows you where the open interest is. I know I see that now recently. Everybody's got up in arms on open interest as to where the option contracts lie. And you can see where all the interest is, somewhere around between 840 and 900, actually 850 to 900. So, and you can change that. So it's pretty good. I like it. It works. And you want to see indices? Boy, this is a commercial of Thinkorswim. Are we getting paid for this, Kyle? But here's my beef with them. Here's a mistake I found a while back, and they still haven't fixed it. Macy's. What's Macy's doing in the small caps? Same with this company here, Credit Suisse. And I believe this one probably doesn't belong here. Maybe it does. But these are big boxes for small caps. The idea of a small caps is 2,000, a big basket of 2,000 small cap stocks. I don't believe Macy's is a small cap. And you can see how big Apple's influence on the NASDAQ and Google not so much. And then you can see the bright green bib. So, and also Apple has some influence on the S&P 100 and the 500, obviously. Walmart. So it's a handy little tool. I prefer this charting over TradeStar just because I can. Trade Monster has pretty good charts too, but this is, for me, it works better for this purpose.
All right, Nick, I'm going to take the screen back. People are asking about the packages one more time. Everybody, you can get in. We're going to shut down in about 2 minutes here. I got a bunch of people asking where are the links for the packages. Check the chat on the GoToWebinar. So you got that right bar where it shows a bunch of information for the webinar. There's a chat in there. You can find the links right in there. Again, really excited for everybody coming on board. This is what Marketfy, when we started this company a year ago, our vision was days like this, and being able to show great traders, show their real results, and then be able to help people just like you that are looking for the consistent returns, that are looking for the right trades, that are looking for the right system. So if you're looking for that and you're sitting there and you watch this webinar going, man, that's what I want. That's what I want to do. Get signed up today. I got a lot of questions asking about how much is it after the 6 months. If you choose to continue, it's $75 a month. But you get the $399 for the 6 months, the personal coaching, the entire Mastering Credit Spreads course. You get all that private messaging we're talking about, all of those one-on-one messages we've shown where whatever you need in the market, Nick's going to help you out, okay? Nick, we're about to sign off, buddy. All these other questions that are coming through, still coming through. That's what you become a member of Nick for. Get in there, get part in the conversation, join the community with Nick, and start making the returns that we showed you today. All right, Nick, thanks for coming on for the Education Week, man. You know how much I appreciate it. Any last words of wisdom here?
Words of wisdom. No, and, you know the yellow snow thing? Oh, I know. No, I won't say it. It's too dirty. Never mind. Somebody told me something in Mexico, and I said, I'm not gonna. How many do we still have? It. We have a lot of attendees. No, I'm gonna offend somebody. No, I'm not gonna say it. Forget it. No.
All right, buddy. Well, I hope the humor comes with the 6 month package too.
It's
um,
not very good humor, but that's okay.
that's all right. All right, KB. How much are the commissions, real quick, at Trade Monster? There, Nick.
$7? No, I don't even look at that stuff, but it's very competitive. They have actually, you can go to their site and then they have a page that compares them to all the other biggies.
Oh,
So they'll be able to answer it much better that way. Oh, I see people following me on Stockwitz and Twitter, so we must have said something right today, Kyle. I really appreciate you guys putting this thing together. Heck of incredible effort by everybody at Benzinga, Marketfy. Uh, the attendance is insane. I mean, I've worked with third-party vendors that do this for a living, and nothing but putting events like this together. And we're just doing here such a fantastic job right here. I appreciate it, Kyle. Thank you very much.
cool, buddy. Nick, I appreciate it too. Again, that's Racer Nick for the Twitter. Everybody that's asking for the link to the $300 package and the VIP package, please check that chat. We'll also send out a recording with the link and the deal tonight. But again, that shuts down at 6 p.m. sharp tomorrow. So you have to get in right now. I can't keep this open, past that. So, Nick, I appreciate everything, buddy. Looking forward to seeing you at the Open tomorrow, man.
All right.
Good night, everybody.